Hello and welcome to the Trading with WebRDD YouTube channel. Today is the 4th of November and we are going to analyze today's gold market. You can see that yesterday we entered the market with a sell order and gained around 375 pips from that trade. First of all, I would like to show you how I entered the market after the price came to that sell zone. You can see there were bearish 1-hour candles forming during that time. I checked the movement on the 15-minute chart, but I couldn't find any fair value gap there. Therefore, I checked the bearish movement on the 5-minute chart and you can see there was a fair value gap available. You can also see that with that bullish 5-minute candle, the price touched the fair value gap, then it rejected with a bearish candle. After that, I checked the same movement on the 15-minute chart and I entered the market after the rejection of that bearish candle. You can see that the price continued to move downward, but I closed my order after the price reached the support area. That was because I noticed a fair value gap on both the 15-minute and 5-minute charts, and I expected another movement to fill that fair value gap. We also saw a big upward movement yesterday on the 4-hour chart with a strong rejection wick. Therefore, sometimes the price moves upward because of that wick, which is clearly a liquidity-grabbing wick near the buy zone. I'm expecting the price could move upward due to that 4-hour candle formation. However, we have to wait and see what happens after the price fills that fair value gap. You can see the fair value gap here. I'll delete that setup and show you clearly. This is the fair value gap I was talking about. It's now acting like a buy zone. If the price fills that fair value gap without crossing below, then we can enter the market as buyers because that's a good buy area. I believe there are some buyers and sellers active in that region, which is why the price came down there. Now, I would like to show you what we can expect today in the daily chart. You can see that yesterday was a consolidated day. We didn't have many opportunities to enter the market. Earlier, in the daily chart, you can see there was a big downward movement and after that some upward pullback, especially last Tuesday. So what we can expect today is very important because we might still see a downward movement as the price comes to the buy zone. It depends on how the price reacts around that buy zone. If the price reacts as a buy zone for an upward movement, then we can enter the market as buyers, but if the price breaks below, then we can expect the price to come down to the next buy zone. It all depends on how the price behaves around that area. In the 4-hour chart, you can see the 150 EMA is just below the current price. Sometimes the price may move down to that level as well. It depends on whether the price will fill that fair value gap or move upward or downward. It all depends on that. You can see the price has already filled that fair value gap and we have around 12 minutes left in this 15-minute candle. So we need to wait and see what happens in the next few candles. Now, I'm going to draw the buy and sell zones if needed. But you can see that there's no major movement either up or down. The price is just touching between these two zones. Therefore, we don't need to draw any new buy or sell zones. We can keep all the zones we drew yesterday. Also, I will not draw any new support or resistance lines because the price is still reacting perfectly to the support and resistance lines drawn yesterday. So now, I would like to draw the best possible setups using the current buy and sell zones. The first setup for me is a buy setup. If the price rejects around the buy zone, then we can enter the market with confirmation from the 15-minute chart. First, we need to wait until the price comes down to the 150 EMA line. Then, after the formation of a bullish rejection candle, we can enter the market using the 15-minute fair value gap. You can also see the price is currently filling the fair value gap that was created yesterday after that big movement. Let me show you what happened at that time. The price came down and created a pullback, but it was a very big pullback, so we didn't get any entries. The price then created a large fair value gap at the bottom of that wick. Therefore, we have to wait until the price comes down there again. Now the price is touching that fair value gap, so we must wait for confirmation to see whether the price rejects that fair value gap. If the price rejects the fair value gap with a bullish 15-minute candle, then we can enter the market from that point. Our first take profit target will be the sell zone. We can also hold the trade until we see a crossover on the 5-minute or 15-minute EMA lines. However, these days the EMA lines are a little confusing because of consolidation. We need to make significant adjustments based on the market structure, especially when the price moves into the middle area of the EMAs. It's harder to predict the trend direction. Sometimes the price reacts to EMA lines and sometimes it doesn't. So you have to be very careful when trading in this type of consolidated phase. This is the second setup I am looking at. The first one is buying from the buy zone and the second is buying from the fair value gap if it's rejected by the 15-minute candle. We can also enter as buyers if the price comes down again. That would be our third setup, but we must wait for a bullish candle on the 1-hour chart before entering. We also have a good chance to enter the market with a sell setup. If the price comes to the sell zone, then we can enter after seeing a rejection candle on the 1-hour chart. Then you can enter using the fair value gap and your take profit target will be around the buy zone. This is a good possible scenario to sell the market from that sell zone because there are two EMA lines near it, the 150 EMA and the 100 EMA. You can see the price is reacting to both, especially the 150 and 100. Earlier, the price reacted perfectly to the 20 EMA, but now it's touching and crossing around those higher EMAs. So, these are the key things we can observe in today's daily forecast. The market is very consolidated and I'm expecting it might make some dramatic movements today because a lot of liquidity was collected since yesterday. The question is whether the price will move upward toward this fair value gap or downward toward the big buy zone. That depends on today's market. Please remember to enter trades at each zone only with proper confirmations. That way you can get good profits. Thank you very much for joining our daily forecast and we will meet again tomorrow morning. Thank you very much.